Good evening. Hi, friends. It's a real pleasure to be here in front of all of you. Takes me back to my roots, probably. So I'm going to give you some of my history and some of the presentations in terms of what we are going to go through. I'll take you through the company later. First, let me introduce about myself because some of you might be wondering as to why am I here. And thank you very much, Tony, for giving me this opportunity because my life started with this. I was over there, one among you, way back in 96, 97. That's when we introduced the machines part of it to the country over here. So the ride-on sweepers, scrubber dryers, the cigarettes, the burnishers, all these machines for Eureka foams. Those were the Nilfisk advanced machines, and that's what we started with. So life transpired with that in terms of what we could do. The market was very receptive. It was a different life cycle of the market. And some of the wonderful contracts that we could convert at that time, we were not in contract business that time. We were only selling the machines, just like you. That's why I said I was one among you. From 97 to 2004, I was also selling machines. So some of those contracts, just for your information, were, I would say, Tata Motors, the Indica plant, which came up in 97 at Pune, and Tata Motors Jamshedpur, Tisco CRM, L&T John Deere, L&T HED. Some of these contracts, they were like, each contract was worth more than 2 crores of value for the machines. And since we were not in the contract business, we were only selling these machines. And that's how we understood as to what we need to do. Because when we started interacting with the contractors to convert that particular order into the machines that it should be, that's when we realized more and more as to what it needs to actually sell a contract. And that's what I'm going to talk about more over here, standing in front of you. So what we have over here is a mix of some of the technology part, even for the term for that matter, mechanized housekeeping. That's something that was coined way back in 97. And that's still stuck. And the market is catching up with that, which is a very healthy sign. Because we all know the manpower cost will perpetually keep going up. Not that the machine cost is not going to go up, but the machines always bring in the efficiency, the machines always bring in the productivity. And that's where the right mix is. Okay? So I'll just run through the company that I'm currently running. That's FFS, FF Services, as we have renamed it. Earlier it was Forbes Facility, now it is FF Services. So this is the company that we are running over here. And we have presence across 350 locations with 5,500 employees. We have a mix of business, which is food business as well as the FM business. Just to give you a figure, food business is roughly about 40% of our turnover. 60% comes from FM, and that's where we are. I'll just run through these slides because these are only introductions. Mechanized housekeeping, food, operation maintenance, offshore services. These are the business segments that we cater to. And the market segments that we cater to are these: automobile, manufacturing, pharmaceutical, oil and gas. So if you see the mix of the customers, you will realize that almost 80% of our customers are industry. And I'm very happy, Tudi, that you said you focusing on industries because even when we started this business way back, that's when first time we studied the market mix. Those days, the market mix used to be completely different. In 1997, the market for the professional cleaning with the organized sector was roughly about 1,500 crores. And the BCG report, which was published in that year, just indicated what is the size of the industrial market. They said industrial market is at least 5 times that figure. So that's the importance of the industrial market, what we have. With all these new movements which are there, the Make in India, with the growth of economy, with the manufacturing segment, which is now registering over 25% of the growth compared to the last year, I think that segment is very much open for anyone and everyone to tap. So I would say you guys are focusing right. I'm very happy to hear that, because that's something which is very dear to me. What I'm going to do is basically run through, after that, this part. It starts with the relationship between the equipment and the facility management. So what do we have here? First and foremost, I want to state that this is a supplementary relationship and not a complementary relationship. Okay? Many times there is a misconception that the machine sellers are complementary, but I'm happy to say they are not. I think no contract worth its salt would be without a component of machinery. When we started way back in 97 till 2002, 2003, I would say, that was the initial period. The contract element on machines used to be as high as 12% to 17%. That's the importance of mechanization. So you can understand today, if the market size is that vast, even if we consider, let's say, 7% to 10% of that, what is the equipment market available for us? And that's the market we need to tap. Okay? So that's the potential of the market, that's the need of the market. We just wanted to emphasize that as to what is the need for that. The choice of the king, the customer, because gone are the days when the customers used to buy themselves and they used to give it to the contractor. Because those days contractors were nothing but the manpower suppliers. So in that era, companies started by buying the machines and giving it to the contractor, getting the labor from them. But as you can well imagine, this is at cross on the interest level. Because the machines are reducing the number of people required, whereas the manpower suppliers' interest is to see how we can get more and more machines out of the plant. So just to give you an example, Tata Motors Jamshedpur, we had the ride-on machines over there for the road sweeping. And one fine day, both the road sweepers, their steering arms broke. So that's the kind of era, that's the kind of interest levels which are there for the manpower suppliers and this. Luckily, today's times, those contractors are very limited, though they are very much there. But today, a lot of contractors have started talking about mechanized housekeeping. They have started talking about machines. A lot of customers are very well aware of what they want and what they're asking for. So they are also very clear. They specify the machines. If not by themselves, they will ask somebody like us. By that, what I mean is IPC, Kasha. They will ask somebody like us to define as to what machines are required for that contract. And that they will define that these are the machines that we want, and then you please quote for the contract. So the customers have also progressed. Now, that is where again we have a dilemma, okay, as to what are the right machines. Because when we say a scrubber dryer, I have seen contracts where we actually meant a scrubber dryer, a 50 centimeter brush machine to be used over there, and a contractor getting sometimes even a wizard, a Roos wizard, which was a staircase cleaning machine worth about 20,000 rupees, and say that yes, my contract is mechanized because I am employing the machines. So we have to be aware of what the requirements are, be very clear with the customer to define as to what the requirement is and what they should specify, and also help them in the evaluation, which will again come up in the next slide, as to how we can handhold the customers also. Okay. Third part is the data-driven applications. Why I'm saying that is because this business of machines, in my opinion, is an application-driven business. It's not a solution-driven business as yet. What I mean by that is, the customer says, for me, housekeeping is top to bottom, left to right. You got to clean everything. But what is going to be needed for that? Whether the aisle size provided over there is enough for a ride-on machine or not. And if there is any specific area which the customer needs or any specific application that the customer needs. For example, the tire industry keeps coming up with this, that how do I take out the carbon? I guess you have provided some machines at the PCBL. I'm talking about Chennai, Tara rather, that area. So over there, how do we take out those deposits? These are what I define as applications. Now these applications is what is going to define how near you can get to the customer. Because if you can win over the customer by giving the customer confidence in terms of what application I'm talking about and prove that, I think you've won the customer for life. So that is something which is very, very important. I think many of us, I mean, even I have gone through that, many of us tend to ignore the role played by the application and tend to focus on what is the requirement of machines, and then it becomes a standard contract. If you're talking about a contract, you need a walk behind, you need a vacuum cleaner, you need a high pressure, you need a wet vacuum, and that's what the contract is all about. But this is not. We are a diverse country, we are a manufacturing-based country, okay? And we also have different levels of dust. So be clear as to what we define and be ready with the data to show to the customer that these are the solutions which we have, these are the products that we have, which suffice your application. Okay? The more we do that, more frequently we do that, the better we will also be at our own jobs. That's my personal opinion though. Contact base and reach. Now what I mean over here is basically look at the room over here, and I just saw your presentation, you're talking about 37 salespersons. Okay? Now any facility management company you see will have a maximum of 5, 10 max 15 salespeople, but never 40, 50. So the customer contact that a machine manufacturer will have is way too high, way too deep for a country of our size. And that's very, very important. Because that is where you have basically the key to who are the customers, where is the application required, where is the solution required, who's looking for a change, who has a problem. So that database is what you guys have, and you need to utilize that properly. You need to showcase that properly to show the customer that yes, we are the ones who has the right exposure, experience, and we are capable of providing you the right solutions. So that's something that I wanted to talk about. What is the to-do list over here? In my opinion, these are the most important factors. Build trust. Okay? The relationship between the contractors and the machine sellers is still not as fluid as it should be. So we'll still have to put in a lot of work in terms of building that trust. That trust can be built only by opening up to the customer, being approachable to the customer, and making the customer also aware, whether it's a service provider or a customer, meaning the company. But they need to understand that these are the people who, if I tell them something, they will not misuse it, they will guide me properly, and that's the trust base that we need to establish with the customers. More so with the service providers than with the companies, because the companies are not so much bothered about it, but the service providers are very touchy about it. If I introduce, let's say, Sodexo to some customer, and then to the same customer I introduce Compass also, it gives a wrong message. So when you do that, you have to make it very clear to the customer that I am not going to be binding to you, because the customer will ask me to bring in competent service providers, and I will do that. We will reach that stage only when we start selling a combination. Okay, whatever sales I talked about earlier, not a single sale would have happened if it was not for selling a contract. It was not selling machines, it was basically selling a contract. So the complete contract evaluation in terms of what is the manpower cost, what is the consumption, what is the machine cost, everything we used to work out and then give it to the customer, and then only identify which service provider will do the job. And then provide the customer with the options of 2-3 service providers. Let there be competition, let the best man win. But this is the hard work which goes into winning those customers. And that's why the building of that trust, that we will actually provide you the best possible solution, is very, very important. So I would request all of you to stick to that. Engage with the hierarchy. Now that's true whether we deal with a customer or we deal with a service provider. But again, more so with the service provider, because the tendency is more like we will approach the top person of the service provider, and if we have a good established base over there, contact over there, we will get orders. But it doesn't happen that way, because service provider's business is an operations-based business. Here, the operations of every city, every customer, every state is equally important to the service provider. So the owner, the top person, cannot really dictate that I'll go with this machine. At the same time, the solution which is required over there, application which is required over there, might be a complex one. So those people are not having that liberty to say that, okay, I'll go with this one only. Sometimes even the customer defines as to what I want. Okay. To give you a classic example, January we purchased about 8 units of ride-on scrubber tires for Bajaj. Now, Bajaj just doesn't allow anybody but Roots. That's the contact base which is established over there. Why? Because the company has been in touch with the entire hierarchy. Whether we talk about the top person, whether we talk about the operations person, whether we talk about the service providers, while at service provider, the unit managers, as well as the state in charges, everybody. So this is where that plays a very important role. For that matter, even accounts and commercial, it's not enough to have a contact base only with the top person. It is very important to have a contact with the commercial person, with the procurement person, so that they also get in touch with you whenever there is a requirement. That whether you have a better solution for this, or this customer is very stingy, can you help me with some payment terms or the price? For them to open up to that level, you have to build that hierarchy. So never focus only with that one particular top, that okay, I have a base with this person, I have this customer for life. No, doesn't happen. We can't take this thing for granted. Handholding for transition. Now, what I mean over here is when the service provider changes at a customer place, okay, sometimes there are machines to be taken over, the earlier machines. Now, what is the status of those machines? The incoming service provider doesn't know. So, when you know that this service provider is changing, again, it becomes a contact point for us to see how we can establish that contact, go to that new service provider and give them that confidence that yes, we know what the status is of these machines and we are with you, even if you have to talk to the customer that yes, these machines have to be refurbished or put to use, or what is the kind of AMC level that's going to require because the machine is now 3 years old. So that's the kind of thing that is very much essential, because that again gives that comfort level for the service provider as well as the customer to talk to you as the preferred provider for the machines. Okay. Very important aspect. The other aspect in this point is basically about the transition. Not everywhere you have the manpower switching over from one service provider to the other. So when the new manpower moves in, again training that manpower is a big task. Okay. Unfortunately, the service providers don't have that network where they can go to every nook and corner of the country and train the machine operators on how to use it properly. And for a service provider, for that matter, it's a big, big pain area. If I have to change the machine cables for all the machines, it runs into crores. Now, whether we can avoid that cost, yes. Simplest of all the solutions is put a sleeve on around the cable. And then with the material movement also, the cable doesn't crack. Or how to use that cable properly. If I have the cable this side, if I start moving the machine towards the other side, the cable is not going to be entangled. Now these basic things also need to be trained. And training that to the user level is very important. If I have to establish this with one more example, I would give you the example of Arvani Orlicon, a very good company. They were the electrodes manufacturers. These guys approached the welders at the shop floor. They did not limit themselves to the procurement or the owners. They approached the welders at the shop floor and they trained them on how to use the welding rods properly. Automatically, when the requirement came, it was very specific. We want these electrodes. So please consider how deep you can go and how deep you can do the hand-holding for any kind of transition. Lead generation. As I said, you have 35, 40 people over here who are generating leads. If I talk about CRM, I mean, yesterday you guys have won a lot of awards, so congratulations to all of you for that. Just if I have to ask you a question, what is the CRM, what is the prospect base that anyone has? Anybody? No? Customers, yes. Count. Yeah, average or the highest, whatever. That's the active list of customers, right? And per month, meaning you're adding 15 new every month. Correct. So even if you consider the same number, 15 multiplied by 50 is 750. My own CRM, as on today, does not exceed 150. So that's the difference that I'm talking about. The reach and the coverage that you guys have is tremendous. And that's a basic tool that you have to multiply your sales. So use that for the lead generation. You don't have to be bound by any service provider unless the service provider has called you for a specific customer. Okay. Because ultimately your sale is going to go through the service provider. So be that lead generator, get them. You also know after 2-3 examples, if some service provider is acting in a manner where he gets your lead, he gets the contract, but then he buys some other machines. You can always blacklist that customer and go to the next one. But with the size that you have, 750 leads, that's really huge. So you have to capitalize that properly and use that also to get the key customer to become a key customer. So that's something I would say is very, very important for you. Bringing in innovation. Now, whichever service provider we talk about, they're still weak. We are still weak in terms of the innovation. what is happening the world over, what are the new machines coming up, yeah, what is the specific application that has come up. I think equipment sellers are in the best position to decide that and to bring that in. If I have to again give you an example of that, I think the 110 volts, 400 cycles vacuums never existed in the country. But that innovation came up, and then every airline is using that today. So look at the market size which is there. It didn't exist prior to 2002. So that's the kind of innovation I'm talking about. That's the kind of application-based knowledge that you guys have to bring in and then spread it over here so that more and more service providers get attached to you, depending on you for that innovation. Today we are talking about robotics, but whether they are practical, how practical are they? Talking about robotics is very easy, having a machine to run by itself, but then given the conditions that we have over here, of the material handling, of the housekeeping for that matter, in terms of the basic housekeeping, keeping the pallets stacked in a demarcated area, that's a basic discipline, which is sadly lacking in our country. So over here, how effective would a robotic machine be? So bringing that innovation, also giving it back to those manufacturers, saying that this is where we can develop something which will be better. Because if we have better solutions, we can sell better. Right? In terms of skills and competencies, I don't see there is any dearth of that over here in this room. So if we have to compete and win and go better, these are some of the ways and means that we can adapt to go there. Tony asked me to look at this future outlook. So I think the first point, I don't know, pardon me if it's going against, but I got to talk about it. So what I mean over here basically is converting the OPEX to CAPEX to OPEX. Okay. Now, to give you a simple solution, if we sell a machine, I'm sure we make about, let's say, 25-30% margin on that. Now, with the same machine, if you have to give it on rent, what are the benefits that we get? For one thing, the customer is then free to decide whether the service provider is competent and doing the job properly, because they can always throw the person out and get a new person in without having to think about what happens to the CAPEX. What will I do with these machines? Whether the incoming service provider will buy the same machines or not. That's one aspect of it. The second aspect of it, we have a huge number. The pyramid, if you see A, B, C class service providers, currently probably we only have the A class, some of them B class in our prospect base. But if you have to approach and capitalize on the B class and the C class, they are the ones where this thing will play a major role. Because for them, CAPEX is a big thing. The business is a thin margin one. The cash flows are not really healthy. Okay? For a service provider, I'm talking about. So if we have something like this which is open, we are creating something which is a dispenser. A cleaning machine is a soap dispenser. The more it runs, the more we earn. So that's the kind of concept that I would like to bring about. I would have loved to bring about, but I shifted to the business of facility management in 2005. So I couldn't do it that time. But I would have loved to do that, because that's something you just need some deep pockets for 1 year. And after that, it's year on year. Okay? So you have the freedom, the customer has the freedom, and that's where the sale really can multiply. So that's one prospect that I'm talking about over here. The second is partnering success together. What I mean over here is basically the applications, the reach. Now, all these things, when we put that together, and then we see how we help the service providers get more and more business, how we get the service provider to be more and more efficient. That is where we start partnering for success together. Because ultimately the success is also supplementary, whether we talk about a service provider or the equipment sellers. But how to use that properly is where this concept comes in. So we need to really be aware of that as to how we can partner for success together. Whether we talk about training, whether we talk about the mobilization, transition, whether we talk about getting in the innovation, whether we talk about the lead generation, these are only different means for us to get more and more closer to the service provider. And the last point I'm talking about over here is pulling together. Now, this is also a very important point. What I'm sure many people over here would be aware of this institute called AMU. Right? AMU is run by Nilfisk and ISS in Denmark. Now, why are they doing it? They're doing it because that's a long term. That is where both these segments of the business get together for ensuring that the customers get a better solution day in, day out, and keep on improving on that. That's just one aspect of it as to how we can pool the resources together. Okay. Pooling resources together could also mean the key account management. I heard the key account management over here that you are appointing, but that key account management is not about only getting sales. Key account management is also building and developing sales. Okay. Again, if I have to give you an example, we started this particular exercise of working with Indian Railways way back in 2001. That's when they approached us saying whether you can help us to improve the amenities provided to the customers. And we partnered with them. And we came up with this entire railway business, what we see today. Whether we talk about onboard housekeeping, whether we talk about the depot cleaning or the clean train station. All these terms are coined by railways, so we can't really help it. But these businesses never existed earlier. When we started pooling the resources together with the customer that time, this business emerged. And just for Eureka Force, it was a 70, 80 crores of business. So how we can come up with new segments, new solutions is that. Another example I would like to give over here is the Blue Flag certification. India as a country never had a single beach which was a Blue Flag certified. And even a country like Greece has over 100 beaches which are Blue Flag certified. The whole of Asia did not have a single beach which was Blue Flag certified. Dubai was awarded and it was taken back. So when the PMO decided that we want to get into that, we partnered with them. And we got 12 beaches over here which are Blue Flag certified. Now that business is also a sizable business, a big business, but these kind of business ideas come up only when we start pooling our resources together. So whether it's a customer or the service provider, but when we identify those progressive ones and then pool our resources together with them, we can really come up with a lot of new segments, new business ideas, which can develop tomorrow. Because any business at any point of time needs these three horizons. Horizon 1, Horizon 2, Horizon 3. Horizon 1 is the current business that we have, okay, and whatever the size of business could be. Horizon 2 is that business which will grow to that size in the next 3 to 5 years. And Horizon 3 is where I'm talking about, because these are only in ideation phase. These ideas can then develop into business concepts, testing, and then they get into the operations. And that's why the H3 will take about 5 years for us to reach there. But ultimately, if we see the horizon after 5 years, it will be 3 times the size that we have today. Okay. So these are few of the things that I wanted to place in front of you. Okay. I am open for any questions if you have. Yes.
Processes. Hello. You are talking about, giving the machines, to the customers, or you are buying the machines and then you are deploying it. Okay, and then the end customer thinking is whether we should buy it or whether we can go into a rental mode or not. But recently I had gone through, because it was a delayed one. What they did is they went in a boot, boot strategy, which is build, own, operate, and thereafter transfer. So what happened is what facility management is doing is that they are deploying the machines and telling the customer, my contract is for 3 years. If you are going to terminate it in 1 year, then you need to pay us the depreciated value, or they have made a monthly stable. And if you are terminating in this month, then balance amount you have to pay.
Correct.
And you own the machines. That is another way which I see as a good thing for.
So there will be customers who will be doing that. There will be service providers who will be doing that. But then that again comes to the transition part of it. So if that contract is terminated, whether government or any other customer, they are bound to appoint some other service provider to take that. So that's where the transition comes in, where what is the status of the machines, whether we can bring it up to date to run for the next 3 years. And for that, what is the maintenance cost going to be? With that, training to the team. And yes, giving that confidence to the customer and service provider is the underlying thing for all these aspects. Thanks, bro. See, what happens over here is where the value of the machines is decided by the customer in this case. Okay, not the service provider. So if a service provider is invested, let's say, 100,000. Now the depreciation or the book value of the machines after a certain period is, let's say, 40,000. The customer and the service provider might say that the incoming service provider will have to take it over at just about 20,000 or 30,000. That happens because the value is not established and certified by the machine manufacturer, and that is not conveyed properly to the customer and the service provider. That's where I'm pointing that you have to. Because when you do that, then that is where you're giving that confidence to that customer as well as the service provider that we are here to handhold. And it's not a loss-making deal. I mean, you can always make money out of that. We know what is the valuation of the space. We know what is the value of a service. But when we do that, it's a massive market again because the changes keep happening. Unfortunately, the mortality rate in our industry is also very high. Yes. It is, it is. Because that valuation decides on whether the incoming service provider is going to be comfortable or not, as well as the outgoing service provider, because in all probability he might be carrying some outstanding with the customer. Plus he has to take a loss on this equipment sale. So it's troublesome for all the parties involved. That is where to ease that out as much as possible as a active player from the machine manufacturer is what I was trying to highlight in the transition part. Yes, yes. Yes, Adil. Thanks.
Anil and Vinay, maybe a
Yes,
point
yes.
to add on equipment sales specifically. What we tried and worked out very well for us at Zeiss, I don't know how it will work for you. Our receivables write-off percentage is between 0.5 and 1%. It's extremely low and one of the better ones in the industry. That means high discipline around giving credit is required when you pick customers. But what we did is we got our bank, our leading bank, to underwrite a NBFC to give loans to or give channel financing to our customers at interest rates that they would have given it to us. Now, Zeiss being a large company, we were entitled to almost 8 to 9% of interest. And this interest rate was allowed to the NBFC to give it to the end customers, which was fantastic because let's say we had industries which wanted to buy, or even in smaller companies which wanted to buy equipment that are expensive, a couple of crores per machine, but they couldn't afford it, or even the dealers who wanted to buy and then sell. This opened up, but what we had to do for this is we said we will do a first loss damage guarantee, right? FLDG. This meant that if the loan is not paid up by the customer, we will do good that loan. What was the risk? We were anyway having the credit on our books because we chose whom to give credit to, and we did the KYC, the know your customer, and only then we gave credit. When we were anyway giving credit to them, we were getting paid on time on the same credit if I gave that credit to the bank instead of to the customer. So when that happened, I started getting payment on time. Even the bank started getting payment on time because the credit rating of the customer will drop if he does not pay it. And he is a lot more disciplined when he pays the... So there are a lot of innovative financial instruments that are available to finance your the service providers, for example, to buy more, or to the dealers if you want to buy more. There are fantastic new instruments available which you have to explore and see if it suits your business or not, and if the risk you want to underwrite or not.
Yeah, very good point, Shreyas, because
these are non-banking financial companies that have relationship with banks, right? So I am talking about Credible in this case, and Credible has a relationship with almost all major banks in India. So whoever is your banker, they will have a relation, and they can roll this out for you. It's called an FLDG. That is so instead of giving credit to the customer, we were giving it to the bank, and we said, and since our write-off was so low, 0.5% approximately. We took that risk and we said, what can go worse? If you are doubling your customer, how much might that write-off go to? And that was the risk you need to calculate and then take.
Absolutely. See, this service provider by themselves will never get anything less than 13-14% as an interest. You're getting at 9%. Use that hedging, leverage that, and give that customer. So, yeah. No, that's between you and the NBFC, but more so for you internally, because that's the hedging that you are doing in your books to provide for what Shreyas said. And in case it doesn't happen, then you have other service provider who will take that up. For the interim period, whatever risk you are carrying of making good those payments is covered by that hedging. Right, Shreyas? Yes. Okay. What I would do is, I have mentioned about the hierarchy part. So in that hierarchy, if you have the contact base with the top person as well as the sales head and the operations head, we get them together and we talk it out. So we run the program for, let's say, 3 months, 6 months, whatever. And that is where we say that you guys have to certify that this lead has come from us. And then if this sale comes, the machines will be bought from us. So these are the people who are going to make do their word. Okay. So you have to depend on them. If you limit that to the unit manager, he might not have any say in terms of the procurement. Okay. So you have to have the top involved over there. But while I say top, it's the entire hierarchy, not just one person. Yeah, because see, today, all said and done, the best of the sales in facility industry is to the tune of 1.5 crores to max 2 crores a month. It does not exceed beyond that. Okay. Now, if there is a way a service provider can see that going up by, let's say, even the 25%, he would be thrilled. Because for a service provider, it's an annualized business. It's an accrual business. It's not a monthly business. Okay. So they would be very open to these ideas. Thanks. Okay. Thank you. Thank you very much, Tony. Thanks, Marcus. Thank you.